Welcome to dlctalks. Today we are going to talk about how to stay on top of key wealth management trends. Today's topic is a very interesting topic because there are a lot of things which are changing in the wealth management industry. There has been a paradigm shift in last few years since the time the wealth management or the art of investing has actually come in play. I joined this industry in 2005, and from 2005 to 2000, probably 20, things were pretty much going at a very normal pace because the markets were evolving, the things were changing at its own pace, while the wealth managers were trying to figure out what are the new things which are coming in. However, a lot of things have changed in last 2 years. While the pandemic has set in, when pandemic set in, I think we were just in the traditional mindset of investing, of wealth management. March 2020 onwards, there have been a lot of things which have changed. A lot of new things have come in. People are just getting adaptable and acclimatized to the different situations across the globe in this industry. I have seen the world evolving in terms of financial industry almost 2 decades now, where we have seen a lot of cycles, up downs, downturns in the markets, in the economic meltdowns during the 2008 and 2020 specifically. There have been a lot of challenges in the industry for a lot of people. To name it, I would start with investors. Challenges for the investors, challenges for the wealth managers, and challenges for the product manufacturers, right? For the investors, it has been predominantly now a situation of problem of plenty. There are too many things available on the platter. It is getting very difficult for them to choose which one to take, which one not to take. The problem is of mis-selling. A lot of people are being mis-sold by various organizations, by various individuals for their selfish interests. These are the two key areas. Also the adaptability, and adaptability is not just for the investors, it's also for the product manufacturers, for the wealth managers. While we transitioned from 2019 to 2020 and the pandemic set in, there has been a lot of focus on the digitization, and there are a lot of wealth managers and investors who come from a very traditional mindset. It is very difficult to change your mindful thinking and to adapt to newer things. Though the technology came in 2015 and the effects were quite visible, but most of the effects came in 2020, and that is why the adaptability became an issue, because people who had the traditional mindset, who were not willing to adapt to the change, suddenly started feeling the heat of it. That led to a lot of turmoil for the wealth managers in the first 2 months of the lockdowns, when we were not allowed to go out of the houses to do the physical transactions and all. And a lot of investors also faced a lot of problems because the markets had seen a major correction during that time. A lot of people wanted to make best of it but couldn't. The problems have been there for the product manufacturers as well. Because of the regulatory issues, it is not easy to bring in a newer product, the technology wise, the product feasibility wise, to the investors platform. It takes a lot of time to get around the regulations and beat around the bush to actually come and put something on the platter. However, people have graduated from adaptability now, and they are still in the process of getting adapted to various newer things which are coming in. Now I'll take you through how to invest and where to invest. It is very important to define your own asset allocation. Every individual's needs are different. Every individual has a lot of things to work around with while he is deciding where to invest, what not to invest into. As you have so many options these days where to invest to, it is very important to figure out your mind where not to invest to. There has been a lot of digitization in the last few years. You have seen a lot of platforms coming in. These platforms offer you so many things, so many products. It's a Pandora's box for you. You can just open it and figure out what you want to do, what you don't want to do. But it is also all the more important to at the back of your mind to figure out whether it is the right fitment for you or not. There are mutual funds, there are shares, there are cryptos these days, there is real estate, there's bullion. People invest into debt markets through fixed deposits. Traditionally, people have been investing into PPF, Kisan Vikas Patra, all those kind of MIPs and stuff, post offices schemes. You have hedge funds now, you have arbitrage funds, you have pre-listed IPO markets, or private markets for that matter. I mean, there is a whole lot of market where actually the companies are unlisted and you can actually get into those kind of companies. Today, even there are platforms where you can actually become an angel investor for as low as 100,000 rupees. I mean, this was quite unheard of about 3 years back or 4 years back, but the things are changing, and there are so many things, so many investment avenues opening for investors. If I were to put it for Indians, I think the government has allowed Indians to invest outside India, and now there are platforms coming where you can actually invest outside India in shares, in ETFs, not just a single unit wise, but even in fractions. So things are opening up. There is a lot of paradigm shift right now. The demographics are changing. There are millennials who are joining the bandwagon of investing. Who knew that we would open about 50 lakh demat accounts every quarter when the pandemic set in? The trend has been continuing. Since last 2 years, we have seen almost on an average about 35 lakh demat new accounts being opened. And this gives us a feeling that the millennials are joining, the Gen Z people are joining in the investing bandwagon, right? Also because I think there is a lot of digitization. It's at your mobiles, at your web URLs, and it is easier for you to actually just go log in, open your account, and click and buy. Now I'll take you through what trends which we are seeing in India in global markets which are changing and which are coming in for the investors throughout the globe. Till about few months back or few years back, the global investors, even the investors globally and in India, were allowed to invest or had the access to the products to only certain category of investors. So the so-called the HNIs and the ultra HNI kind of people, the most affluent side of the people, because the ticket sizes of these kind of investments were nothing less than $500,000 or even $1 million, right? For example, there were hedge funds in US, in Europe, in Asia Pacific regions, where the hedge funds were only accessible to the first category of investors, as I spoke about, the arbitrage funds, the private markets. However, the trends are now changing. There are platforms which have come up in Asia Pacific regions, in US, and they are spreading their wings throughout the globe, where you can have the private banking opportunities to the non-private banking investors also. So these are the opportunities like hedge funds or arbitrage funds or private equity funds, where the ticket sizes were as high as $1 million or $500,000. They are getting bundled up. They are getting into smaller ticket sizes. You can invest as low as $25,000 or $50,000 to have a taste of it. What is it bringing to the investors? For the investors, on the table lies the opportunities where they can actually invest into something which they would just think about. They would not really get into it because they would hear about it from their friends, from their families, but never had the opportunity to get into it due to the fact that they were high ticket sizes products. Now is not the case. I think globally the markets are evolving a lot. When we see the biggest of the banks throughout the globe, they are reaching out to their investors, to the other wealth managers, and creating products. As I said, the adaptability, they're creating products which can fit to the investors' needs, but have the access to certain category of investments which were not just available to them at all. Even today, as I speak, we have probably about 5 or 6 international platforms who have spread their wings so well, and they have gone throughout the globe, where they can actually access the data of the investors and make them products available at probably negligible costs. I mean, what are the things which are actually changing is also with the digitalization and the zero cost products. Uh, there is a lot of competition which is opening up, and I think this is for the benefit of the investors. Throughout the globe, the regulatory authorities are making sure that things should come in, but keeping in mind the protection of the investors. This is not new. This has been around, but with the digitalization, with the robo advisory, with the AI and the machine learning coming in place, there are a lot of things which have gone as ill effects for the investors also. A lot of people have faced issues in hacking, the money being robbed out of the banks, somebody taking the money from their wealth management accounts, the identity theft. All these things have happened, and they are becoming more rampant also. But it is very important for us as an investor, as wealth managers, as product manufacturers, to realize that, keeping in mind that these things will happen, we need to make sure that the money is safe. The money will continue to grow for us. It will make money for us, and we are in the right baskets of investments. Now I'll talk about the new generation of investors. What are they thinking? How are they thinking? And what is in store for them? Uh, the new age investors, probably popularly known as millennials, the Gen Zs of the world, they're more enthusiastic, they're more inquisitive, they're eager to learn about the investment products more than what we could learn, or I would say even our earlier generations could learn, right? They don't mind experimenting with newer things. Uh, just to give you an example, I have had experiences with some of the Gen Zs and the millennials who have asked me about cryptos, about derivatives, but I think we as a generation prior to them have never heard of these things earlier. Uh, the newer generation also doesn't want to get into locked in products or investments for that matter. Something like buying a house or buying a car. You have Ubers, you have flats available for rent. They don't mind spending, but they would like to save more these days and get into something which works for them. And the newer age generation also has got access to the money quite fast and early in their careers. The salaries are pretty high and they are ambitious. So hats off to them that they are looking forward to get into the investment markets. In fact, personally, I would say one of my youngest investor is about 10 years old, and she got money from her grandparents as what we call as gift, right? She decided to start investing that money into the markets, and I feel so proud that even these kids who are as young as 8, 9, 10, they are looking forward to put their money to a better use rather than going out and buying things which are not so material these days. So that is how the whole change is going to come going forward as well. You'll see a lot of people, a lot of young guys getting into the investment markets, and I think this is good for the markets. This is good for the millennials, for the Gen Zs, because they're going to learn a lot of newer things. And even for the product manufacturers, they'll get to learn a lot of newer things from these Gen Zs and the millennials, and they'll get more products which could benefit these younger generations. I'll also talk about what are the agendas which the top wealth management spaces are looking forward these days, right? These days, the needs are changing for the investors pretty fast, and it is very important for the wealth managers and for the product manufacturers to understand how these changes are happening. Uh, Again, it's about adaptability. They need to adapt not just to the technology but also to the investors' needs. There are newer segments which are getting created. Till few years back, women never used to invest into the capital markets or investment markets, and that has been the case globally. I'm not going to focus only on India, because globally men used to manage the finances of the house. These days we see a lot of women coming out and investing by themselves. I mean, we have done workshops in corporates on Women's Day, and the queries have been phenomenal. The response has been phenomenal in terms of how they are looking forward to put their money to a better use. Also, one of the top agendas in the wealth management industry is the product which is going to come in. As I said, that the products which are now coming in which were available only for the private clientele segment, is now being made available to the retail segment or the non-private banking segment. And more of these things will come in. Also, I think the era of digitization, AI, machine learning, robo-advisory will kick in newer trends in terms of how the wealth is going to be managed. The human intervention will be slightly lesser going ahead in the days to come, but I don't deny the fact that human intervention is going to be there. The personalization, the relationship management will still continue to be there. The industry requires a lot of people as wealth managers, as product manufacturers. The investors, any which ways, are growing, and they'll continue to grow at a much faster pace. To keep up with this faster pace, we need a lot of wealth managers to come into play. And also the earlier ones need to adapt, change with the times which are changing for them, and keep up with the trends in the industry. At the end, I would just like to thank you for listening to me so patiently, and I would especially like to thank DLC Talks and DLC for giving me the platform and to talk about the top key wealth management trends in the upcoming era. Thank you so much. Thank you so much, viewers.